Excellent. Okay, I see quite a few. Thank you very much for that. You've got a pretty good cross section. Okay, and just one last question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? 51 to 100, 100 plus? Please, please type that in and let me know. Great, thanks, Don, Robert, Victor. Okay, wow, we have some very active traders. This is going to be great. Okay, excellent. I think you're going to like what you're going to see today. Before we get into it, remember, don't trade with money you can't afford to lose. Trading can be very risky if you don't know what you're doing. So please educate yourself first before venturing into this with real money. Now, let me share the money management rules that we use here at Trading Wins and have been using for many, many years. First of all, as I mentioned a minute ago, do not trade with money you can't afford to lose. I'm sure you've heard this many times, but it is really so important and worth repeating. The real key here is to trade with an amount that feels small enough that it feels completely insignificant to you, okay? Trading is so much more about how you manage a trade once you're in it than it is about selecting an entry, okay? And for some of you, this will be a few $100s. For others, it will be several thousand. The amount doesn't matter. Okay? The amount you put into a trade doesn't matter. What matters is that once you're in that trade, you're able to remain calm, think clearly, and manage the trade appropriately. Okay? If you go in with too much money, you're going to have a difficult time doing that. So please trade with an amount that feels completely insignificant to you. Also, you should never risk more than 5% of your account balance in any one trade, okay? This will save you, will reduce your risk in the long run significantly. Also, never have more than 50% of your account balance, or 10 trades if you're using that 5% rule, active at any one time in the market. Now, some of you may think, wow, I'm going to leave half my account just sitting there doing nothing, earning nothing. The real reason for this is twofold. One, there are so many factors when it comes to the markets and trading that are completely out of our control. Okay? Any major news announcement or catastrophic event can really drive the markets against us in a big hurry, and it can happen overnight. So this is number one, to reduce your risk. Okay, and number two, to have money there for you that should such an event happen, you'll be able to get back into the market and recover from those losses. And with the system I'm going to show you today, it won't take you very long to recover. Also, never place more than 2 trades per day if you're trading on daily charts, okay? Most of the examples I'm going to show you today are using daily charts, even though the system does work on any time frame, which I'll show you. But what you want to do is be very selective and be picky. Pick the best of the best trades, okay? With this setup, you're going to find numerous trades. But what you want to do is pick out the 1 or 2 strongest for that time period that you're trading, okay, and enter those. You want to spread your trades out. We've seen some increased volatility lately in the markets. So we've seen days where the Dow's up 300 points and S&P's up 20 and Nasdaq's up 50, and everything is moving up strongly. On a day like that, you'll get many setups. If you jump in and put 10 trades on, and the very next day the market retraces, you're going to be in a big hole right off the bat. So that's what you want to avoid. A few other rules or goals that we have here is, and I want you to write this down. This one thing I want you to take away from this presentation is this: you will never go broke taking profits, especially if you are just starting out. Get used to banking those profits. Okay, over time, as you get more and more experience with your trading, you will be able to remain in a trade and squeeze out every ounce of profit from it. Okay, but at least at the beginning, get used to banking those profits. And I want you to remember, when you sit down to trade, leave your ego at the door. This is not about whether you're right or wrong that's important, but it's all about how much money you make when you're right and how much money you lose when you're wrong, okay? So what will you need to trade this system? It can be used on just about any charting platform, okay? There are 3 indicators you're going to plot on your chart. One is the 20-period simple moving average, which I've never seen a charting platform that doesn't have that. The other one is the Ichimoku Kinkin Hoi indicator. Now, I'm going to show you in a moment that I don't use this indicator the way most people do. I actually strip it down and only use one part of this indicator. And also the relative strength index, the RSI indicator, okay? Those are the only three you want to put on that. They're available on most charting platforms, even the free ones out there. So there is no need to spend money on new hardware or complicated software. If you're watching this webinar, you already have everything you need. Okay? Few benefits of the system. Number one, it will work on any market. I will show you examples of stocks and futures and Forex. Okay, it works with options on any market globally, any time frame, and any price level. Okay? It's pure technical analysis, so it'll work on any market. Also, you don't have to have a lot of experience to trade this. I'm going to show you in a moment just how easy it is. It has very, very clear entry and exit points. Okay, has extremely low risk, and most importantly, it is consistently profitable. Okay? So, a bit about the strategy. Again, the only components you're going to have here are the 20-period simple moving average, the Ichimoku Kinkin Hoi indicator, but a stripped down version, which I will show you, and the relative strength index, the RSI, and not the default settings. I will show you the settings I use. So give me a moment to switch over to my live charts. We're going to spend the rest of the presentation on our charts here. Let me show you the system in detail. Okay, so please let me know that you can see my charts. You should be able to see them clearly now. Okay, I've got a chart up here of Johnson & Johnson, J&J. Now, firstly, what I'm going to do, first let me explain. I have the 20-period simple here in light blue, in aqua. Now, we have tested this with exponential and weighted moving averages, etc. All are fine. You can use either one if you have a favorite. But the 20-period simple moving average over the years has been the best for this system, and that's why we strictly use that now. Now, here are the clouds. This is the Ichimoku cloud, but it's a stripped down version. I'm going to actually go back in and put on the default settings for the Ichimoku and show you the difference, okay? So there's three parts to it. There's the Tenkan line, the Kijin line, and the Chiku line, and then the clouds, the span A and the span B. Now, if you use it as a default, this is what it's going to look like, okay? Very, very messy. Now, this is an indicator that has been many years over in Asia, very successfully. And it's actually a very powerful indicator, and I know there's others out there that teach classes strictly on this. We have one as well, and it's a very powerful indicator. Sorry, you probably heard the opening bell from my Thinkorswim charts. The market's just open. But for what we're doing here today for this system, the reason I remove these lines is because it gives you so much more clarity on the chart. This really makes it look messy and is hard to read. So we remove those, and let me just go back to my setup. And it's just much, okay? And then the RSI indicator, the default on the RSI is actually a 14-period RSI, and we cut that in half. Okay, we're looking for a much more responsive RSI, so we cut that in half and have the setting to 7. Also, the RSI is usually an indicator that people use to identify areas of like overbought conditions or oversold conditions. Okay, they're looking for those extremes, and they usually plot lines at either the 70 or 80 level and then the 30 or 20 level. I believe the defaults are 70-30 on Thinkorswim. What we do is we remove those and we plot a line right down the middle at the 50 level. Okay, so it is a 7-period RSI, and we draw a line down the middle at the 50 level. Okay, and that is our chart layout. So those are the only 3 indicators, and this is what we're doing here. We're looking for trend, and this is where the Ichimoku cloud comes in. Okay, so if the price bars and the moving average are above the clouds, then we have a bullish trend. Okay, if the price bars and the moving average are below the cloud, then we have a bearish trend. Okay, very quick and easy to spot. So within a split second that you pull up your chart, you will know what the trend is on a stock. And if it's like this right now on J&J, where it's within the cloud, then there is no trade. It's consolidating sideways, and there's no current trend in place. Okay, the moving average we use to identify momentum. Okay, let me explain momentum the way we read it. So with anything, you can have slight momentum. Okay, you can have more significant momentum, or you can have very significant momentum. Okay, so it's all in the slope of the moving average, and you can also read it on the price bars. Okay, so if you look at the slope of the price bars here, okay, it's fairly significant, but the moving average will usually give you the exact same picture. Okay, and the reason we use it is because during a pullback or retracement, you could mistake the price bars as having a significant downtrend, as where you can see that the moving average does not change. Okay, so that helps you identify the fact that this is just a pullback or a retracement, a temporary retracement before a continuation of the trend. Okay, it works the exact same way in a down market. You can have slight momentum lower, you can have more significant momentum lower, or you can have extreme momentum lower. Okay, so it's all judged by the slope. That's how and why we use the 20-period simple moving average. And then our RSI is used to identify the entries, the actual entries of this. So let me recap. When you first pull up a chart, what you're looking for is to identify the trend. Are the bars in the moving average above or below the cloud? Okay. In this case, let's say we're looking at this area of the chart right here. Okay. So we come in, and yes, bars and moving average are above the cloud. So we're in an uptrend. Do we have a slope on the moving average, and how significant is that slope? At this point, yes, we have a very nice slope on the moving average. So at that point, all you do is focus your attention on the RSI. And what you're looking for a long trade, for a bullish trade, is you're looking for a dip below the 50 line and then back above. And it's that point where you dip back above, okay, that is your setup. Okay, so let me mark this here. Oh, sorry, I got the wrong things. My mistake. Time low is what I want. So there, let me thicken it up for you. Let me do it in a different color. There, hopefully you can see that clear. So it is on this bar here, okay, where the RSI moves from below back to above. Okay, that is your setup. Now there is a difference between the actual setup and the trigger. So for a long trade, what you're looking for a trigger to actually get you in the trade, is a trade just above the high of the setup bar. Okay, so once the high of the setup bar is broken, okay, and you get a trade above it, that is your trigger to go long. Once you go long, you put your stop just below the low of the most recent low. Okay, so in this case, it'd be over here. Okay, it'd be just over here. Just below the prior candle, the green candle. Okay? And then it becomes a matter of managing the trade. Now you can see that as this trade went along, there were several other dips on the RSI from above to below and back above. Okay? Now once you're in the trade, you no longer look at the RSI. Okay? You're not using it for exits or anything like that. I'll talk about exits later on. But all you do is once you get that set up with the RSI, you then from that point on ignore the RSI. Unless, of course, you missed the initial entry, okay? Then everything else remains the same. You have an uptrend in place because price bars and moving average are above the cloud, and you still have significant momentum on the moving average. So if you miss this, you would continue to look for another dip, and you get one here. So you have another entry here, okay? So you can see there's several entry points along here. There's this one here, 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 and here that would have got you into this move had you missed the first one. Normally, when you have a strong trend in place, you're going to get several opportunities to enter the trade here. Now, if you're a more aggressive trader, you can add to your position at each one of those areas if you wish. Okay? But you don't have to. Okay? Once you're in on the first one, it just becomes a matter of managing that trade. Okay? Now, let me see if I can show you another example. I mean, there's several I'm going to show you, but I was looking for one particular thing. Here it is. Okay, so again, here's a chart of semantic. So we move from below the cloud to above the cloud. Okay? And so now we're in an uptrend at this phase. Now we start getting a nice slope on the moving average, and you can see here on the bars, you have a very significant slope higher. Okay? So you have momentum in place and you have trend in place. So then you focus your attention on the RSI, and you're waiting for a dip below and then a cross back above for your entry. So this is one thing that I want you to look at here. I'm going to highlight this. Okay? Right there. Okay? Hopefully you can see that clearly. You see, is there a lag on my, I believe there's a bit of a lag on my charts. Okay, hopefully it's not too bad. So what you see here is a W formation, a double dip, and this is very important. Okay, this is why when you first get your initial trigger or setup, sorry, your initial setup, why I want you to put the stop below the most recent low. You need to give it a bit of room because a lot of times it does do this double dip. Okay. Now, when you get a W formation like this, it's an even stronger setup. It means the move right after it typically is much stronger and will tend to move in your direction right away. Okay, so you're happy to see this. You're happy when it does the double dip because it generally results in a much stronger move to the upside. Okay, so you want to keep an eye on these. And again, if you got in on the first one, okay, you could add to your position when you see the second one, you see that W form, okay, if you're more aggressive. If not, you just maintain your initial position. And of course, once you're in profit, your goal here would be to move your stop up to break even or higher as quickly as possible. Okay? Let's run through a few more examples. And again, it should, or it does work exactly the same to the downside. Let me see if I give you a clear, yeah, this chart here will do it. So first of all, again, if we start from the left of the chart, there's a couple things. One other thing that I do want to mention that I don't think I've mentioned yet, and that is when we move from one side of the cloud to the other with momentum, okay, or in other words, you see the slope on the moving average here during the cross, okay? That's what you want to see. When you see a move from one side of the cloud to the other, regardless of which way it goes, you can see one here from the long side to the bearish side. Okay? Look at that slope. That's a heads up. When you see a slope or a cross of the cloud with significant momentum, it generally means you're in for a strong move in that direction. Okay, so you can see here we did have a nice slope going from below to above, and there were several opportunities to get in. Okay, I'll highlight them. One was here. Okay, actually, let me edit this color. That will help. Let's see, save it as default. Okay. So there was those opportunities. There's one W here, and this one is important as well. You see that it doesn't, the RSI doesn't even have to go below and then back above it, but it does have to touch the 50 level and move higher, okay? So there's that. There are opportunities all throughout here to get in, okay? And then another one here. So this was a sustained trend to the upside, and there were many opportunities to get in or many opportunities to add to your position along the way, okay? But the key here was the momentum with which it crossed from below to above the cloud that gave you a heads up that this strong move was going to happen. And you can see here as well. Here, it was even more significant to the downside. And initially it came back to retest the cloud and consolidated sideways for a while. It then again crossed the cloud, and look at the slope on the moving average here. Okay? Okay, almost vertical. So these are heads up that a major move to the downside is about to happen, and which it did. You can see here, I mean, a total collapse. Okay? Where were your opportunities to enter through here? Once the price bars and the moving average were below the cloud, you knew you were in a downtrend. Okay? You had the momentum or the slope in the moving average. So at this point, you were just waiting for a move back to the 50 or just above the 50, and then a cross below. Okay? So here, let me mark these entry points. There's one there. I don't know why it didn't make as a default. Let's see. Okay, there was one there. A second one here. All right. And remember, once you're in on these, the stop goes just above the most recent high. Okay, and then you can trail it down. And here's a very nice double dip. Okay. So on to the downside, it'll look like an M instead of a W, but it's a double dip. It's the same. Okay. Here's another opportunity to get in. Right here, when it just comes back to kiss that moving or that midline, the 50 level, and then bounce lower. But throughout all this, you can see what a significant move lower happened from this. And you had two signals here telling you that that move was about to happen. And then you had triggers or entry points along the way. Okay? So let's see. Angelo is asking a question. Don't you mean the color of the clouds? I'm not sure what you mean. I mean, you could have these clouds in set up with any colors you want, but you don't have to wait for that color. For example, and Angelo, you may be referring to the typical way that the Ichimoku cloud is used. I'm using it a little differently here. So when you get this cross here, you can see that the cloud at this point is still yellow here, or bullish at this point, even though price bars and the moving average are below. I'm guessing this is what you're referring to. So do you wait till you see it pink here? I don't. As long as we have both the price bars and the moving average below the cloud, that's enough for me to start looking at the RSI for a proper setup. Okay, Hope I answered your question. If not, please ask again. I'm going to bring on our coaching coordinator, Raul, here in a moment to help me with questions as we go through this. Let me just give you a few more examples here, okay? Let me see if there's anything. Okay, so ideally what you're looking for, if let's say you're doing a search, whether it's nightly or on weekends, you're flipping through a number of charts. What you really want to look for are charts that are clearly trending, such as this. A chart like this, okay, not only, I mean, when you have trend and momentum in your favor, you've already won half the battle. That is the key, okay? So that slope to that 20-period moving average is key, okay? And the length of time it spends above the cloud is key. But really, if you look back here, okay, it crossed from below to above with momentum, with that slope. That is the key. That's really what you want to look for, because that tells you it's going to last for a while, and you're going to have many opportunities along the way. And these are really no-brainer trades. I mean, does it really move against you at any time here? No, it doesn't. At any of these moves, these crosses, when it dips below and back above the 50, you get in, you put your stop just below the most recent low, and then trail it from there. And again, I'll talk about exits in a little while. You know, it's just a matter of time. And the real nice thing with this, especially when you get that W or the M formation, is that it tends to move in your favor right away. Now, I noticed earlier when I asked the poll question that a number of you are option traders. So you know how important it is to have a trade go your way immediately when you're trading options. If it moves against you as soon as you buy, that loss in premium is going to require a much stronger move to the upside for you to not only recover what you lost, but then make a profit. Okay, you're going to need a much bigger move to the upside for you to recover that loss in premium. As where when it moves in your favor immediately, you're in profit right away, and that is the key here. Okay. Let's look for a few more here. And actually, let me go through some Forex and futures, because I saw many of you here that trade Forex and futures. Nothing changes. The chart setup remains the same. Indicator settings remain the same. All the rules remain the same. This is strictly technical analysis, so it doesn't matter which market you're trading. So here we go. If you look at, this is a chart of the Australian Canadian dollar pair. Okay? Look to your far left here. Look at the slope or the momentum that was in place when it went from below to above the cloud. Okay? Very significant. So once the price bars and the moving average clear that cloud, you now have an uptrend in place. You now focus your attention here on the RSI, and you're waiting for a move back to that 50 or slightly below. Okay? How far it moves below, it really doesn't matter. Okay? What matters is that the momentum on the 20 remains the same. So in other words, if this retracement came all the way back to the cloud here, okay, this dip on the RSI would be much lower. Okay? But what would happen is the moving average would start to roll over. So you would no longer have a upslope in the 20 anymore. If that were to happen, then you no longer look at the trade, because you don't have momentum in place. You must have that slope on the 20 in place. Okay? So here it dips below and then back above. Okay? So here is your entry, right in around here. It's this bar. Okay? And again, that is your setup. Your trigger is a trade above the high of that setup bar. Your stop goes just below the most recent low, right here. Okay? All right? What happens? It pulls back again right to that 50. Gives you another opportunity to enter. Okay. In and around here. okay? And off it goes. So you look at that move, your original entry was, just over the 1 mark, 1.03 up here. I mean, a very nice move. And that's what you're looking for. You can see here, to the downside, it works the exact same way. Now, in this case, on the Australian Canadian dollar pair, okay, we moved lower very, very swiftly. On this pullback, though, here's that RSI, came back, touched that 50, and moved lower, okay? And so your entry would have been in this area, right in here, okay? Now, you're not going to have all winners. You're not. But over the long run, it is very, very consistent. We have been trading with this for many, many years. It is very consistent. Here's the Euro Canadian dollar. And this is a classic trade. Here, again, you have bars and moving average below the cloud. So you're in a downtrend. You have very nice momentum lower. Look at that slope on the 20. You get a pullback. There is your entry right in here. Okay. This is what you're looking for. You move above and then back below the 50 line. Okay? So this is your bar. This is your setup bar right here. As soon as it breaks the low, here, off you go. And you can see moves in your direction right away. So that slope or that momentum, okay, the severity of that momentum is key, because the stronger it is, okay, the quicker this is going to move for you. Couple of futures. Here's the chart of crude oil. We all know what's happened to crude lately. Okay? Absolutely annihilated here. But look, here is your heads up. Okay? Heads up. Look at the slope as it crossed from from above to below the cloud. Right? Now once the bars and the moving average cleared that cloud, you focus your attention on the RSI. Okay? Right over here, move back above and back below. So here was your first entry. Okay, let me get that. This bar here. Okay, right here. That was your first entry, and you can see you put your stop just above the most recent high here. Okay, which was the previous bar. Okay, I can move it all the way across. You can see it's never been taken out, and believe it or not, with the rules that we follow with the exit strategies, okay, you'd still be in this trade. So you would have got the majority of this trade lower on crude, which is enormous. This has been enormous. But even if you had missed that one, you had another entry here and another entry here, okay, and then another entry more recently here. All would have worked out incredibly well. Here's the euro. The euro future, same thing. Look at the cross from above to below with momentum. It consolidates for a while, and then you have your triggers. Okay? And you're in for the majority of that trade. Okay? So, I'm going to bring on Raul with me. If you have a symbol that you want to throw out, you want me to bring a chart up on, see how this would have worked, I'm glad to analyze it with you, and maybe we can answer some questions along the way.
It's always a pleasure to be here. Thank you so much for letting me be a part of this. Funny story this morning. You couldn't get into the building.
I know.
We don't do many of these events this early in the morning. 5:30 a.m. Pacific time.
And the front doors of the office building were locked.
Thanks to the nice cleaning lady who did let you in.
Yes.
All right. Let's start with Charles. He wants to know about the SPY.
Sure. Let's look at the SPY. Okay. So again, the key is having that slope in place. Okay. Quickly, as soon as you bring up a chart, you can tell whether you're in an uptrend or a downtrend based on that cloud. Okay, and then you have that slope. Focus your attention on the RSI at that point, and on those dips are your entries. Okay, so you can see right along here. Okay, now the SPY has been very volatile near the end of this year. Okay, when we got this huge move lower and this super bounce higher here, this V formation. When you get that, you're not going to get a lot of trades with the system, because there was really no pullback. Okay, there was really no pullback at all. It just zoomed higher, but that's okay. You're gonna find that you're gonna have many setups. Now at this point on the SPY, you can see that the slope is pointing downward, but you're above the cloud. Okay, so there's really no trade there. So here's an example where it pulled back too far. Remember I was saying earlier, when it pulls back too far, the moving average starts rolling over. So you lose that momentum. So even though the RSI is crossing from below to above right now, okay, on today's bar, you don't slope higher in the 20. So that is not a legitimate setup. Okay, you need that slope higher or in your direction of the trade.
John's asking a follow-up. He's saying on the SPYs, do you stay out from 192 to 200?
From 192 to 200? In here, I'm assuming. From here, well, I mean, the whole point is here. You see, when we got that move from below to above, okay, it was with momentum. So this is what caught our attention, and as soon as the bars and the moving average cleared the cloud, we knew we were in an uptrend. So we switch our focus to the RSI. Problem is we never got an opportunity to enter because, let me zoom in here. You can see it better. You can see here at this point, it did not get back to the 50, okay? It stayed just above the 50, okay? It did not come back far enough to get us in here. And then once it dipped here, the pullback was too severe and we lost momentum, or we lost that slope on the moving average, okay? That's the key. When you have the slope in place, you can enter the trade safely. Because that momentum is like a wind at your back. It'll propel you forward, okay? In this case, we didn't have it. And then we moved up higher again, dipped below, but again, we dipped too far back, okay? So we don't have momentum in place to enter now. So we're gonna have to give this more time to regain its momentum, okay?
Rick's asking about one of your favorites.
Sure, which
Southwest Airlines.
Oh, yes, LUV. Well, this is one of my favorites again because you know, when you get a chart like this with just, it's so consistent, right? A nice clear slope upward. It's so much safer to trade rather than a chart that has big swings up, big swings down, and back and forth. But you can see here along the way, it's clear we're in an uptrend because bars and moving average are clearly above the cloud. There are periods where the moving average is flat and we want to stay out, but then there's periods where it is sloping, okay? And those are the entries that you want all in here. At any point in time, any of these points here, there's one there, okay? One there, okay? All of those were valid entry points because the slope was in place, okay? And you can see that any of those that you bought would have been profitable, moved in your direction. Same with up in here. You see here, very significant slope in place. It pulls back, and here's your entry, right in here. Now, one thing I should mention, I don't think I have actually, and this is quite important. Once you have the setup and you're looking for that trigger, meaning that trade just above the high of the setup bar, okay? If it trades below the low of that setup bar first, the trade is negated, okay? It's disqualified. You no longer want to take that trade. You only want to take it if it breaks the high of that bar first. And if you're looking for if you're in a downtrend and you're looking for a short trade, then once you get that setup bar, you're looking for a trade below the low of that setup bar to be your trigger into the trade. But if it trades above the high first, then it's disqualified. Hope that's clear.
Folks, I apologize in advance if we don't get to all your symbols and questions. We'll try to go as quickly as we can. Luis wants to know about one of your other favorites, Baidu.
Baidu, sure. How much time do we have left, actually?
It's now 7 a.m., so we've got another 15 minutes or so.
Okay, great. So here, again, this is another perfect example with Baidu. Okay, let me make sure I have my drawing tool. So from below to above the cloud, we have momentum. Okay, very nice momentum higher. Okay, clearly in an uptrend because the bars and the moving average are above the cloud. We get this pullback, a nice orderly pullback, and here is our setup on the RSI. And actually, it's a beautiful little W setup. What happens next? Okay, boom, it just takes off. All right, that's exactly what you want to see. All right, so this right here, if you could take a snapshot of this, and I'm pretty sure we'll be sending out a recording of this afterwards. So this is a classic trade. This is a textbook trade is what I'm trying to say. Perfect. Right now, Baidu bars and the cloud are within the cloud, but there is momentum to the downside. If this momentum continues and comes through the cloud, okay, with that slope, then we're looking at a significant move lower in Baidu. At this point, we don't have that, okay? At this point, we're just in a wait and see mode on Baidu.
Thanks for that, Vince. Maverick wants to know about Apple.
Sure. Let's have a look at Apple. So Apple, here again, there's these periods where completely flat, and you stay out of this because that moving average is flat. Okay, so you're not trading there. Then you move above. You're clearly above. This I think was a well, this was on earnings. So you got this gap up, which created this momentum. Now you focus your attention on the RSI. On this dip, we did not get an opportunity. Okay, we had to wait for here. Okay, now here's a perfect example. Thank you. I forget who it was.
Maverick.
Maverick. Thank you, Maverick, for bringing this up. I want you to focus your attention on this because this is a great example, and this is an easy mistake to make when you're first starting to trade with this system. So this should be your setup bar right in here, this little green bar. Okay, you can see the RSI dipped just below and move back above at this point. So what you're looking for on this green bar, and I'm going to remove this line and zoom in for you so you can see. Okay, let me zoom in here. Okay, so it was here, this green bar right here. Okay, that is your setup bar. Okay, there's your move higher. What you're looking for is a trade above the high of that bar. Okay, but we didn't get it here. You see that? Now, if I go two bars without getting that, then I disqualify the trade because the momentum obviously isn't as strong as I thought it was. Or if we get a trade below the low first, and you can see on the second bar, it did trade below the low, but it hadn't traded above the high yet. So you disqualify that. Okay. Luckily, a few days later, we get another entry right in here. Okay. Here's the cross. This is your setup bar right here. And on the very next day, it breaks the high, and then off it goes. Okay? So these are key rules. These are all rules we implemented along the way once we started testing this strategy. And because of these rules, if you follow them, it is very, very consistent. Okay? And properly, you must follow these rules.
Thanks for that, Vince. Mike wants to know about Lily.
Okay. LLY, I believe? Yeah. Okay. So here's another perfect example. Even though you're above the cloud, okay, the moving average is flat, you want to stay out of this choppy mess because that's what it's going to do. It's going to chop you back and forth. Okay, you do not want that. Okay. Here is your next valid entry. Okay, and you do, although it doesn't move that much. Let's see. From here's your setup bar. Okay, you get in about 63.5, and it went as high as about 65.5. So it $2 move before coming back. If you hadn't moved your stop up yet, you would have been stopped out, but your stop would have been about $1 away. So this is going to happen as well. But here was a nice trade right here. Okay. Same thing. You had nice momentum higher. Bars and moving average above the cloud. You focus your attention on the RSI, and here's that W formation. Boom. Okay, and off it goes. All right. Here, within a week, you had a nice $5 move. So that's exactly what you want to see. Okay.
I'll let you get back to your presentation.
Let me just recap, yeah, and then maybe we can answer a few more questions, okay? Give me just a moment to switch back here. Okay, I just want to recap what we've covered today so far. So, as you've seen, this is a system that will work on any market, be it stock options, futures, or Forex, globally, any time frame, any price level. It is very easy to spot this trade setup on the chart, as you just saw. It's good enough that you can use it as a standalone system. We have been trading with this for many years. As I said, it is very consistent. Okay, it tends to move in your favor immediately, which is very important, especially if you're trading options. Okay, and even the majority of the trades that don't work out, that don't go your way, are not even losers. They're just negated trades. That again is because of that rule. If the trade's below the low first, you want to disqualify that trade. Okay. Now, I know there's a ton of questions on exits and other things. There are questions as far as what else you can add to the system. What I've shown you here is the basic system. Unfortunately, I don't have the time to go into the exits and everything else that we can add to that. But we do have a class coming up on Friday, January 30th, 1 p.m. Eastern Standard Time. Okay, it's a 2-hour class. I'm going to be teaching this class. What I'm going to show you is the complete system from entry to exit, okay, including exits. I'm going to actually show you 5 different exit strategies that you can use with this, but I'm going to share with you the one main one that myself and the other traders here have been using very successfully for many years. I'm going to also show you how you can trade this with options, okay? When you might want to put on a credit spread versus when you want to just take a long call or a long put, that sort of thing. I'm going to cover exactly how you can profit with this with options, okay? And also, during the second half of that class, we're going to do a full scan together for real-time trades setting up that coming week. That way we can all walk away with a few trades to place right away, okay? And as a bonus, I'm going to throw in our full course on the Ichimoku Kinkin Hoi, because this is a very, very powerful indicator. And if you wanted to use the full indicator in conjunction with the setup we have, you can do that as well. And I'm going to be covering that, the full class as well. To register for this, just go to tradingwins.com/move, M-O-V-E, okay? And as soon as you do, this is what you're going to get. You don't even have to wait till the 30th for the class. We're going to send you, within half an hour of your registration, we're going to send you a recording of the previous pro class we did. That way you can watch it and you can start trading with this right away. Regardless, we're going to save you a seat at the live class on January 30th. Okay? And we're also going to throw in a 30-day membership to our pro service here at Trading Wins. Okay? What that entails is every evening, Sunday to Thursday, we record a video, send you out the video by email, which is we recap what happened that day in the markets and where we think the markets are going next. We review our open trades. We highlight new trades setting up. And they're not just trades from this setup. Here at Trading Wins, myself and the other traders, we have several systems that we use, some of which have never been released to the public. But during those videos, whenever we get a setup on one of those trades, we highlight it for you. And also, as we're covering different securities and looking at different charts, we also cover different aspects of the technical analysis. So it's really an educational tool. In addition to the videos, whenever we decide to take a trade here at Trading Wins, we will send you out an alert by email telling you that we're getting in and also following up and letting you know when we're getting out of that trade. Okay, so you can look over our shoulders and trade along with us. So all of that is a $988 value, but for anyone on the webinar today, just $97. Okay, again, it's tradingwins.com/move, M-O-V-E. Now we do have to limit this to the first 25 people, unfortunately, only because you know, we get people from all different backgrounds that attend that class, complete beginners to experts. And our goal in that class is to teach you the full system and answer every one of your questions so that when you leave the class, you're able to trade this like a pro, okay? And if we don't cap the attendance, there's no way we're going to be able to get to all your questions, okay? So unfortunately, we only have 25 seats available. Again, you're going to get the complete system from entry to exit. I'm going to show you the main exit strategy that myself and the other traders here use. I'm going to show you exactly how to trade this with options, and we're also going to do a scan together so that we can all walk away with trades to place that coming week, okay? And we're going to throw in the Ichimoku course as well. Raul, any other questions if we have time?
A lot of people have asked whether this works on smaller time frames. I know the answer is yes.
Oh, yeah, absolutely.
Can you show us with an example?
Sure, let me switch back to the charts here. So let's pick something that moves. Let's look at Tesla, let's say, and let's move to 1 hour time frame. Okay, so here's a class here. Again, nothing changes, okay? Even though you're switching time frames, and the settings stay the same, everything stays the same. Here we move from above the cloud to below the cloud with momentum, okay? Once we have bars and moving average together, we switch our focus to the RSI, and we wait for a move above and then a cross below again. Now, when we get it here and here, okay, these 2 points, you can see that the moving average was flat. So we do not want to take that trade. You want to wait until you have momentum in place. At this point, we had momentum. The RSI comes back, okay, touches and starts moving lower again. So this was our entry right in here. Let me mark that for you. Okay, this was your setup bar. Okay, on the first one, and then here on your second one. You can see it's like a little M formation here, okay? And boom, it completely collapsed. So it went from 218 down to 207, and this is on an hourly chart, okay? So a huge move there. Let me show you on an even smaller time frame.
Can I ask you a question about the M formation? Earlier on, there was a question. It works the same for short trades as well with the same M formation. Is that correct?
Yeah, absolutely. So on to the long side, it'll look like a W. To the downside, it looks like an M. But it's exact same rules, exact same everything. Okay. Here is the 15-minute chart on Tesla. You get a move from above to below the cloud with momentum. Okay. You focus your attention on the RSI once it moves up above and then back below. Okay. Here, that is your setup bar right over here. Let me mark it for you. Oops, sorry, wrong one. Time level. It's right in here. Okay, and it just collapses. So in that, each bar is 15 minutes. Remember here, and we went from the roughly the 222 area to the 213 area. Now, I don't expect you to get the entire move here. Of course, you get the absolute bottom and the absolute top. But in what, 15, 20, sorry, 15, in about an hour to an hour and a half, okay? It went from 222 to 213, plenty of move range for a profit there. So again, any time frame, any market works just as well.
Sean's asking, when the cloud is above the price, can all the rules be successfully reversed?
When the cloud is above the price? Yeah, well, exactly. Well, you need the price bars and the moving average below the cloud for everything to be reversed. Absolutely.
Randy's asking, will the 50 period moving average work?
I'm sure it will. We just we find the 20 mainly because the 20 is the most popular moving average. It is used by most professionals as well as most retail traders, and over the years, we've tested many different moving averages. We found the 20 to be the most consistent. The problem you're going to have with the 50 is it's not going to be as responsive, right? It's going to take a lot longer to turn. So you can certainly try it, but I think you'll find the 20 is more effective.
The pro service that people get complimentary access to for 30 days, that includes trade alerts as well on real time?
Yes, absolutely. It's the full membership. We don't hold back on that at all. For those 30 days, you get the complete package.
And what happens at the end of those 30 days?
At the end of the 30 days, if you're enjoying the service, you do nothing. It'll automatically renew at $97 a month. If for whatever reason you'd rather not, then give us a call before the end of those 30 days, and we'll cancel that for you.
Why do you use RSI of 7 instead of 14?
Again, we want it to be more responsive. With the 14 trading opportunities, and we want that even on a slight pullback during a sustained trend, we want an opportunity to get in. So through all of our testing, we found that the 7-period RSI is the most effective.
Ray's asking, do price bars have to turn before or at the moving average and not if it breaks it to signal valid trade setup?
Yeah, it doesn't matter whether they do break it or they remain above it or below it or right on top of it. It doesn't matter. What matters at that point is the RSI. Okay.
Sean's asking, what are the downsides to using this system? Is it too lagging?
No, it's actually not at all. There's very again, the only downside is this. Let me bring up my charts again.
And speaking of downsides, somebody was asking earlier on as well, does this work for consolidation situations or is it more only for trending?
Yeah, it's more for trending, exactly. It's a trend-based system. Consolidating markets such as this period here on the SPY, okay, you really want to stay out of that because it's just back and forth choppiness. So that's why we use that slope of the 20 to identify the trending or the momentum periods. So you want to remain out of that. Here's the downside on this system. When you get these violent moves like this on the SPY, when it just collapses and then moves back higher, a number of traders will look at that and say, wow, how did I move there? Well, with this system, you will miss that move because what this system is looking for is just a sustained trend and then these pullbacks, these minor retracements before a continuation of the trend. That's what it's trying to identify. So this is a safer way to trade, okay? This is removing the volatility risk and just taking the safe, consistent profits out of the market. These violent moves, you're going to miss. So if you're an aggressive trader, then you would see that as a negative.
Now, you yourself, not an aggressive trader.
No, I'm not. I'm very conservative. I'd rather take the safe bet than gamble.
I hope you're going to tell that story on the class, at the class on the 30th of how you became a conservative
trader.
Yeah,
I'll tell you a story. It may shock you, but it was a long time ago.
I want to say thanks to Peter, David, Anthony, Janet, William, Andrew, Anthony, Greg, Ramona, and Carrie, and Eugene, all for signing up. Thank you so much.
Great. Looking forward to seeing you at the class.
Appreciate it. Ray had a question. Does the moving average slope have to be at an approximate 45-degree angle?
No, it does not. But the more significant the slope, the better. Okay, so depending on how many trades you have set up at the same time, like let's say you have 3 you're looking at on the same day, you want to choose the one with the higher slope, right? The more significant slope.
Tim is asking a very important question. Will you share the setup for scans and which platform to use and which setups would be best?
Sure, we can do that, and I'll share with you the watch list that I maintain myself. You can walk away with that, and I'll show you exactly how I do my scan. We're going to do it together. That way we can all walk away with some fresh trade ideas.
Now you use Thinkorswim. It's obviously a free platform. What do you like about it that you haven't seen what's?
Well, I trade a lot of options, so I really like the option side of Thinkorswim. But there's many good charting platforms out there and many free ones out there. So again, don't overcomplicate things if you're just starting out. Just pick a basic platform, one of the free ones that you can understand and that have these indicators, and you'll be fine.
Mort's asking if the trial for 14 days or 40 days. Neither.
No, it's 30. It's 30 days. Yeah, the full trial is 30 days, and again, it's not it's not a partial trial, it's a full trial. You get the full membership package for those full 30 days.
We haven't done a lot of futures talk today. The system obviously works well on futures.
Yeah, I showed the crude chart and the euro chart. And really, like I showed on the crude chart, with futures, this is really good at identifying an early entry. I'll flip back again and put that crude chart up here, because when you can identify that a significant move is about to happen based on the slope going from one side of the cloud to the other, it's significant. And then the way we manage this trade, which I will show you clearly in the class, it will allow you to stay in this whole trade this whole time. You'd still be in crude, believe it or not, and that would be from it would have been from roughly the $93 level, and crude is currently at 48.89. So I mean, huge move.
Was it the end of or around the 20th of December that you said oil was going to 47?
Yeah,
I think was
exactly.
50,
yeah,
60 or so.
That's right. It was in this area up here that I call the $47 target. Went as low as 46.83 and was bouncing the last couple. Yeah, absolutely.
David asked an important question. Is there any special software you will need to trade your system?
Nope. Everything you saw today, that's all you need. Just a basic platform that has these indicators, and you're all set to go.
Sorry, just back to that futures talk. Are you surprised at how many people trade futures despite?
No, it's become a lot more popular.
I stopped trading
10 years ago. There were very few retail traders trading futures. Nowadays, I see it at every webinar. There's many futures traders.
After I saw that movie Trading Places, you know, they tried to corner the market on the oranges futures.
Yeah.
Said, I don't want to be on the wrong side of that.
Right.
Bill is asking, Charles is asking, do you have an auto scan set up for a TradeStation?
No, we don't as of yet. Currently, we're working with Metastock. They're programming some of our scans. That will be ready very soon, the next few weeks. And then we will be looking at other charting platforms as well. So they will be coming, but for TradeStation, we do not have anything yet.
Trade Tricks is asking, I took the class about 4 months ago. Is there a free retake? Absolutely. If you want to join us again for the class, and that's one of the benefits. If you join us once for the class, we'd be delighted to have you back anytime we do.
Yeah, just email us, and we'll be glad to send you an invite. Absolutely.
Bill wants to know if you can, sorry, let me just answer one question. Trade Tricks is asking, how do I contact you? You can contact us by email, info@tradingwins.com. We'll have the fellows put it into the chat box here. As well as by telephone 1-888-574-2426. Question from Bill: what would be a good entry on the Qs?
On the Qs, let's have a look at the Qs. Okay, so currently, unfortunately, like we saw in the SPYs, we've lost momentum here because this pullback went too far. Otherwise, the RSI is just now crossing the 50. So if this holds and we move back above the cloud, what you're going to have to wait for is the moving average to start looking like this, and then a pullback into that, and another dip below, and then back above on the RSI. Okay, so right now you're just sitting on the sidelines waiting for the Qs to identify its next trend within the cloud. So there is no trend here on the Qs. You can see back here, there was certainly momentum. That is what you're looking for, okay? And again, you notice that from below to above, there was momentum on that move, which told you this was gonna hold up for a while. That's the key. That's what you want to look for, okay?
I want to welcome Melinda and Richard, who've just signed up. Looking forward to seeing you there. Thank you for joining us. David's asking, will we get a recording of the future class that's included in the $97 price?
Oh, yes, sorry, I should have mentioned that as well. So as soon as you sign up, within a half hour later, you're going to get the recording of the previous class. So you can watch it, start trading right away, or make a note of any questions you have to bring with you to the live class on the 30th. You'll have your seat reserved for the live class at the 30th, and then right after that class ends, you will receive a recording of that class, okay, of the live class.
Rhonda's asking if you can go over what's included in the offer again. Thank you for that, Rhonda. Thank you for reminding me.
Sure. Let me just bring that up for you.
If I'm not careful, I think Vince might hire you to do my job.
So again, I'm going to go through the full system. What I showed you today was the basic setup. I'm going to show you the full complete system, entry to exits, 5 different exit strategies, but the one main one that we use here. I'm going to tell you how we would trade this with options, okay? At what point you want to consider a credit spread versus a long call, long put, that sort of thing. Covered all. I'm going to talk about which expiration month you should select for your option, what kind of delta, you should have all of that. We're going to do a full scan together for real-time trades setting up for that coming week. And I'm also going to teach you how to use the Ichimoku Kinkin Hoi as a strategy in itself, okay, as an indicator on its own, which we normally teach as a separate class. So you're really getting 2 classes in one here. Again, the link is tradingwinds.com/move, M-O-V-E. And I'll be teaching the class on January 30th, 1 to 3 p.m. We typically go a little longer, okay? We typically go almost 3 hours to cover. And again, we do have to limit the class to 25 people because we do want to answer all your questions.
John's been asking very politely if you can take a look at ArcelorMittal MT.
MT, okay, let me go back.
And while you're doing that, I'll ask you a quick bit of trivia. You know where they're based?
I do not.
Guess. Luxembourg.
Luxembourg,
Luxembourg,
wow.
Yeah.
Okay.
The biggest steel companies in the world.
Wow. Okay, so again, very simple and easy to spot. All you want to look for, again, is for trend. How do you identify that? You look for which side of the cloud the bars and the moving average are on. Okay, so in this area would have been a downtrend. Okay, the color of the cloud doesn't matter. What matters is that which side the bars and the moving average are on. You then focus your attention to the RSI, and once you get that move, in this case for a short trade, you need to move above and then back below that 50 line, which happens right in this area here, and you can see you get a nice move right after that. Okay, if you miss it, you have other entry opportunities along the way. Same thing happens down here. Once you have that momentum, remember, you do not want to take a trade when the moving average is flat. You want that momentum in place, okay? And the more significant that slope, the better, okay? Also, the pullback doesn't have to be all the way to the line, to the moving average. It can be before that, it can be right on top of it, it can be beyond it. What matters is that the slope remains in place and that you get that either that touch or that move above and then below, okay? So even here would have been the most recent entry on MT, and you would still be in this trade, okay?
Sean's just clarifying that MT is actually based in India, but for tax purposes based in Luxembourg. How do you feel about moving to Luxembourg?
Yeah, excellent.
All right,
tax saving.
50 seconds. You ready for 3 quick questions?
Sure.
What platform do you use for the full scan in the Pro class?
I will use the Thinkorswim platform in the full class.
How many trades do you send out per day, per week?
There's usually 1 or 2 trades per day, but on average it's about 3 to 5 per week.
Rhonda, I apologize. We won't be able to look at CBOE, but if you'd like, give us a call after the class or send us an email. We can help you out there. Last question. What if I don't understand options? You've got 20 seconds.
In the class, I'm going to cover it really from a beginner level, so I'll do my best to explain it. But we can also point you to resources where you can get the basics on options, and then trust me, you'll understand what we talk about in the class. It's not very advanced.
That's awesome. As always, thank you so much to Yana, to Raleigh, to the rest of the Trading Pub team. Really, really appreciate you having us here. We're humbled that you'd have us join for this amazing session. Hopefully we can get into the building a little bit earlier.
Yeah, that's right.
I'll let you have the last word, then hand it back.
Yeah, no, again, thank you very much to Trading Pub for having us on, and thank you to everyone for being on here with us today. Hope you can join us on the class. And with that, I'll pass it back over to Yana or Raleigh.
Well, thank you, Vince, for that great presentation. on how you use a simple moving average, the Ichimoku cloud, and the RSI to spot high probability entries in virtually any market. I mean, I really like how clean your charts are and how easy it is to spot setups. I thought it was also pretty cool the way you quickly bounced from market to market and explained what your charts were telling us about what was going on in each of these markets. I also want to thank you for that special offer that you've put together for our members that includes registration to the 2-hour class, that special class that you have on January 30th, and access to some prior videos. You have your Ichimoku cloud indicator and 30-day access to your program, all for $97. That's a fantastic package. And once again, thank you for putting that together for our members. And also thank you for the time that you took to prepare and to present this excellent material. Now, folks, I also want to remind everyone that today's presentations, including the presentation we just had from Vince, these are all being recorded, and we will send you an email with a link to these recordings no later than tomorrow afternoon. So if for whatever reason you missed any of the earlier presentations, or there's a key presentation coming up and you have a conflict, no worries whatsoever, because everything is being recorded, and we will send you a link to that at the latest tomorrow afternoon. So we were right on schedule, which was excellent. Anytime the trains run on time, it's always good news. And I see that our next presenter is in the room here. That's Alan Nuckman. Alan, if you can hear me now, would be a great time to do a voice check to make sure that your microphone is working correctly. So I just want to make sure that we've got good audio here.
Test, 1, 2. Good afternoon, good morning. Everyone can hear me?
Alan, we can hear you a little bit on the faint side. Is there a possibility that you can just jack your volume just a bit?
There we go. Helpful. Testing 1, 2, 1, 2, 3, 4, 5, 5, 4, 3, 2, 1. That should be a higher level.
That's perfect.
All right, good deal.
Great, Alan. And now would be a good time to also put up maybe your intro slide. We just want to make sure that the video projection is working, and then I'm going to do a short presentation and turn things over to you.
All right, let's make sure that we have this from the beginning. All right. Is that showing up on the screen properly for you?
Yes, it is. That looks great. That looks super. And Alan, if you're ready, I've got, once again, a brief introduction, and we'll get things.
All right. Thank you. Thank you for having me, and we can get started. Thank you.
All right. Okay, folks. Well, our next presenter today is Alan Nuckman, who started his career at the Chicago Board of Trade and a clerk, and moved his way all the way up to trading futures and futures options in the Treasury pits. Alan has served as a division partner for a major commodities and stock brokerage firm, and he's been the president and developer of leading commodity trading platform and a founder in an options alert service. Alan is a frequent expert for major news organization and regularly appears on CNBC, Bloomberg TV, Fox Business Network, and other major financial media outlets. And with that, please join me in welcoming Alan Nuckman to the Trading Pub and his presentation today on the exchange-traded fund revolution and how to use limited risk option strategies. Alan, the floor is now yours.